Gold is at a crossroads, trapped in a tight channel while momentum fades and key trend lines are about to give way. Will we see a bullish breakout toward new highs, or are we setting up for a sharp slide to the 3,900 zone next week? Stick around as I break down exactly what levels matter, what the charts are saying, and how the fundamentals are lining up. Hey traders, welcome back to the channel. In today's video, we're doing a weekly forecast for gold, combining both technical analysis and fundamental factors to give you a clear roadmap for next week's price action. Let's start with the technical side. Parallel channel trend lines. On the 4-hour time frame, gold is trading inside a rising parallel channel. You'll see the upper trendline resistance and lower trendline support. The lower trend line has held multiple times, meaning buyers stepped in at that level. The upper trend line is the ceiling. If price gets there with strength, that opens the bullish path. But as you can see, momentum is weak. The candles are small, buyers look tired. Key range. Previous day high, low, PDH, PDL area. Gold is currently inside the previous day's high-low PDH, PDL area. That means we're in a short-term range within that channel. If price breaks below the PDL plus the lower trend line, that opens the way for a bearish move. Conversely, if price breaks above the PDH plus upper trend line, we could see bullish acceleration. Levels to watch. Upside breakout trigger. Close above the upper trend line 4,200 zone, bullish. Downside breakdown trigger, close below the lower trend line 4050 zone or PDL, bearish. If breakdown happens, targets would be 3950, 3800. If breakout happens, target could be back toward all-time high zones. Current bias. Given the weak momentum and failure to break higher, my current bias leans bearish. The path of least resistance is downward until proven otherwise. Fundamental. Now let's look at what's happening beneath the surface to support the technical view. The odds of a rate cut by the Federal Reserve have fallen significantly in recent weeks, which strengthens the US dollar and weakens gold. Gold still retains safe haven appeal due to global uncertainties, but those haven flows are not sufficient to overcome a strong dollar at the moment. Technical forecasts show that the next support zone for gold is around 3950 and possibly lower if 4050 fails. Trading plan. Let's put this together into actionable trading scenarios for next week. Bearish scenario, higher probability. Wait for a close below the lower trend line, PDL 4050. Once confirmed, consider entering short, targets toward 3950, 3800 zone. Stop loss would be just above the lower trend line, trigger level. Bullish scenario, less likely but possible. Wait for a strong break above the upper trend line plus near 4200 supply zone with momentum. If that happens, opens path toward prior highs, all-time high zones. Stop loss would then be just below the trigger breakout level. Range or wait scenario. If price remains between trend lines and inside the PDH-PDL range, best action may be to stay on the sidelines, avoid chasing direction until breakout occurs. Use this time to prep for entry upon confirmation. To wrap up, gold is in a precarious position this week. Technically, it's in a channel with clear trend lines. Fundamentally, the dollar is strong, rate cut hopes are fading, and gold's upside momentum is waning. My lean, bearish, unless we see a surprising bullish breakout. Keep an eye on those critical levels. Breakouts mean money. Stay aligned with price, respect risk, and trade your plan. If you found this useful, hit the like button, subscribe, and turn on notifications so you don't miss the next forecast. Drop a comment below with your view. Are you long, short, or sitting out? Thanks for watching, trade safe, and I'll see you in the next video.